Hi, this is Paul Keaton with the Dorsey Wright Minute for March 16th, 2010. Had an interesting conversation with a client of ours the other day. He called and he thought there was something wrong with our website, in particular a performance engine that we have. And he said what the problem was is that it was showing that emerging markets as an asset class were actually down for the year. And this is by mid-March, many assets had recovered. And he just didn't think it was possible that emerging markets, a leadership category of the market for so long and for much of the past decade, was actually down for 2010. In fact, it is, and it's an eye-opener to a lot of investors right now. After having seen the U.S. dollar show a great deal of traction, we're really seeing a period of time that makes you think back to the 1990s when the dollar was rising and it was very, very difficult for international equities to keep up with U.S. equities. And so it makes us think that, is it potentially possible that the next real emerging market might be something in the U.S. if the dollar is able to continue to maintain higher prices and grow versus other global currencies, including the euro and the pound and so on and so forth. Very interesting as we look at some of our relative strength relationships, we're indeed seeing signs that the U.S. market is beginning to show very consistent strength against non-U.S. equities, including emerging markets such as EEM and also developed markets such as EFA. So it'll be a very interesting thing to watch because within U.S. markets, one of the strongest categories are small cap stocks. So maybe what happens over the next few years is that we begin thinking of the next emerging markets category as actually being U.S. small caps, such as the S&P 600 index. Certainly the pieces of the puzzle are still coming together, but it's something to think about and something worth sharing on the Dorsey Wright Minute for today. Thanks.